We're already live. So, hello, welcome to another episode of Daily Market Mastery with me, Christian Rauchenwald, on this rainy or drizzly Friday afternoon. I hope you all had a great trading week. As always, before we jump into my portfolio and into the markets, let's get the usual disclaimer out of the way. Everything that I share in this live stream / video is my personal opinion and in no way financial or professional advice of any kind. You should always do your own research, consult certified professionals, draw your own conclusions, and make your own decisions. Besides that, all the tools that I'm using in the stream, so the broker, the charting software, the strategy I'm following, and so on, are all linked in the video description down below. And the one thing I truly recommend, if you haven't done so, is go and check out the Elliott Wave Principle. So the strategy that I'm using, you can read this wonderful book for free online if or when you use the link in the description down below, and you can use the same link to also get yourself a physical copy. Now, with that said, we can jump into my portfolio, and as we can see, we have a slightly green start into the day. I can hide the message here. If you haven't been here for a while, I've cleaned up our position. We took some minor losses in the smaller positions, so Barnes & Noble Educational, Course, and not sure if it's still visible in the history, Course, Greenwave, and Faraday Futures. So we closed out those positions. So our portfolio now consists of our usual 600 GameStop shares. We increased our position in NEO by 200 shares and the 50 shares in Immersion that we're still holding. And yeah, against our NEO shares and our GameStop shares, we are writing covered calls with expiration April 17th for GameStop and April 25th for NEO. That said, if we jump into the charts, starting with GameStop, looks like today is a very, very green day across the board. And we can see that GameStop went a little bit lower. We're still in the area where we basically, so we're in the target area for what could be potential wave A, B, and C. It remains to be seen if this here is the end already of this specific wave. We could look closer. So we're currently on an 8-hour time frame. We could look closer and try to label the subwave. But yeah, I don't see any need to it because our long-term outlook is still bullish. Our pattern stays valid until or if we break $20.30 to the bottom. If that happens, then at least this part here becomes partially invalid and we would have to relabel to try to figure out what's going on. But so far it's behaving quite well. We have to consider in 1 minute the market's going to open and then check if there is any point in rolling our current options that expire as said at the $35 strike price and then back here on April 17th. If there's any point to either roll them out and at the same strike, roll them out and lower, or maybe roll them back and lower as well. Yeah, so that we can do once the market is open. In Immersion, we're still waiting for the end of this corrective pattern. We are in the target area that we would expect for a free wave move. However, I would expect also that we get to see the 61.8 retracement. So I believe there's still a little bit further downside. In the meantime, we'll just hold on to our 50 shares. If we were to hit the 61.8 retracement, I think we already have a pending order, yes. Then we would actually buy the remaining 50 shares to top up to an entire 100 shares. If we don't hit it, that's also fine with us, and we'll just wait and see how it plays out. In NEO, we are basically increased our position. I pointed out already a couple days ago, 2 days ago, if I'm not mistaken, that hitting the 261.8 extension of this level here would indicate that this might be 1, 2, 3, and we're now getting a wave 4 down, correcting. Although waiting a little bit just to get in a couple cents cheaper didn't seem like worth the hassling quotes. So yeah, we will see if either this is now finally the end of this big corrective move and we go up from here, or if again it was a in quotes false breakout and we go further down. Our stop loss here would be at 363, at which point we would just get out of our position. Yeah, so much about our existing positions. In crypto, we see some increase. As said, it's possible that this is some weird corrective wave till here, but considering how it subdivides or how it appears to subdivide, I think it's more likely that this is just the beginning of the correction, which means we would now get a wave B that takes us a little bit further up. And that wave B, if we, depending on if this is already wave B, it's possible that we first get another push down and so on. But if this were already wave B, we would then eventually use a trailing stop loss to get out of our small Bitcoin position. If we don't go high enough and then we get a wave C, then we just wait out the whole thing, but it will probably take months to play out overall and offer us potentially a way better entry point later in the year or early next year. Yeah, Algorand also slightly green. It's going to be interesting to see if we bounce here at the top of the so-called base channel. I still believe there's another wave too, although first we could go further down. Stop loss would need to be here at 10 cents 58, where the pattern becomes invalid. So right now risk reward ratio is not that bad with 50% risk and a couple 100% reward in return. H&T, there we had the spike lower. It's possible that this is the last spike for this corrective move to finish a free wave correction here, almost touching the 78.6 retracement. We're on a weekly chart, so we would have to look closer, which I'm not gonna bother. There are pretty much two options. Either this is an impulse free wave correction and we get the next impulse that slowly takes us higher. We can see that we're talking here about the next couple of years, or this here is something we can ignore, and this is indeed the beginning of a wave further down. So we'll have to wait and see. Storage, yeah, there we now might have actually finished the retracement as a 1, 2, 3, 4, 5 move. Yeah. Yeah, like so until as long as we stay above 19 cents here, we have hope. If we break the 19 cents, then that would be where if we whatever storage or storage balance I have remaining, I would just dump, to be honest. XRP, as said, should still go sideways and down a little to break out of the acceleration channel and ideally hit the 38.2 retracement. XYO could potentially have finished the correction here. Also great risk reward ratio. So the stop loss would need to be around 5 cents or 4 point something. So we have around 50% risk. And on the other hand, we have 300 to 700% reward. That's that. What else do we want to look at today? I think there is not much worth looking at. What's Frontline doing? Do we again not get a chart? Yeah, let's give it a second. Okay, no chart in Frontline. SMCI having a little bit of a recovery. I believe this could be, as said, like, for example, 1, 2, 3, A, B, C for wave 4, and then we get a wave 5 push down, then we get another bit of recovery, but I believe that from here on we go further down overall. Time will tell. Using some more basic, or I don't know, like some more widely spread trading strategies, we could put a trend line here, and basically the moment we break it, we would have our confirmation. Looking at this, it's possible that this will play out as 1, 2, 3, 4, 5. We bounce at that line, and then we get another correction, and then in the next push we break it. Yeah, but that's just very, very rough estimates here from my side. So overall, we finished up. We don't need this anymore. So basically, we didn't reach the 100% target, but we went through the 61.8 target for this to be a free wave move. So I said I believe this is a free wave move followed by another 5 wave move further down. Yeah, do we have anything else? How's Kavana doing? Yeah, that would be interesting to see. Okay, they are also finally going down. We actually exceeded our 100% target here a little bit, as we can see. Not by much. Could be the indication of a flat correction playing out. Overall, I believe that we might now be correcting this entire move. So there should be, what's that? God, 60%, 70% downside. Yeah, almost 65% or so downside for this to play out as a bigger corrective wave. Maybe even more. Time will tell. I don't have a horse in that race, so I don't care too much, especially since nobody asks for it in the chat or in the comments to label it in detail. So I'm just gonna share my super visual or my first glance opinion in quotes. Again, and that's all it is, my opinion. What's Nike doing? Don't get a chart. Okay. And oh no, there we have a chart. Yeah, so that's going to be interesting. We're right now in an area we hit the 21.4 retracement, which could serve as a potential turnaround. So the question is going to be, is this the entire free wave move where we're also in the right target area? Or is this just the beginning of the corrective move? So that might be, although not as good as it doesn't offer as very, very good risk reward ratio, because the stop loss would need to be somewhere down here. So 90% risk and by far not as much reward. but it's going to be interesting to monitor. With that, let's actually check how the options are doing. So if we have our NEO calls, they are covered calls. They are April 25 and at 650. So if we were to buy them back and roll them out by a week, so that would be May 2nd. There's no volume on May 2nd. Okay, that doesn't help us a lot. If we actually I don't want to roll them out too much unless we roll them up as well, then we would have to go here. So, and then here we would get not that much, so we would get $30, which is 100 shares, 500, so 1,500, 1%, $15. So we would get a 2% return in 2 months. So that's not really worth the premium. Better than nothing, of course, but I don't want to roll it out that far right now. So we're going to wait here. And with GameStop, we have our April 17th, 37. So if we buy those back, 35, sorry, and roll them out by 1 week to April 25th, 35, there would currently be a $5 credit. So we're definitely not going to do that. The other option would be to roll them down. So if we roll them, for example, down to 30, for that we have to switch back here. So which means we would stay on the same, but we roll them down here. And that's not necessarily a great move. As I said, there is still wiggle room for this to correct a little further, but we're also in an area where we reach a point where this temporary pattern or that short-term pattern would become invalid. So not sure if for what's that, $150. Sorry. Not sure if for $150 it's worth to make the move. So we're going to wait a little bit further for more of the option value to, in quotes, appreciate. Maybe this time we actually reach a point where we will let them expire worthless, simply to have more flexibility again or not. Yeah, anyway, with that, we already covered the portfolio. Not much change, to be honest. So especially after we cleaned up the portfolio and now only hold shares in free stocks. Obviously, our biggest exposure is GameStop, as before, followed by NEO and followed by Immersion. And as far as from a monetary perspective, we obviously had a great half 2024. From the moment we started I started the portfolio at Interactive Broker in mid of May till the end of the year, we reached a little bit more than 100%. And yeah, devastating, or not devastating, but a bad start into the new year where we bled basically, I don't know, 30% or so of our portfolio value. I'm gonna check. 23%, yeah, so far. So 23% that we're currently having, that we bled this year so far. I don't believe that it's going to be a bad year. By the end of the year, I'm still very, very bullish on how GameStop is going to develop. But obviously this movement here, considering with our big GameStop exposure and our longer dated calls that don't bring us premium every week, yeah, like maybe I managed to just sit tight till April 17th and let the options expire worthless, hopefully, so that we can write weekly options again and therefore make smaller premiums, but those premiums every week. And then if we are wrong here and there, we can just roll out to a further expiration to compensate for that. Yeah, but either way, so I believe that by the end of the year, the portfolio will again look quite well. Time will tell if I'm right, or if this will be, for a change, a year in which I don't beat the markets. Anyway, that's it for today. So I hope you were able to take something away from today's streams. If you have any specific questions, feel free to join on Monday and just share your specific requests or questions in the chat or in the comments down below. Thanks for stopping by. Yeah, I wish you a pleasant weekend, and I'll see you all on Monday with another episode of Daily Market Mastery. Till then, bye-bye.